Welcome to the Daily Market Comment by Marios Hadjikyriacos here at XM.com. I'm Cristina Marujos. Global markets kicked off the week in a risk-on mood, with the major U.S. stock indices set to open at new record highs and commodity currencies like the Kiwi outperforming in the FX arena, following a batch of encouraging Chinese data. As expected, annual GDP growth slowed in quarter two. However, the details were upbeat, overcoming expectations. The trade war seems to have done less damage than feared so far, judging by the stellar industrial production print. Looking ahead, risk sentiment will likely take its cue from how Fed rate cut expectations evolve ahead of the July 31st decision and any signals out of the trade talks. On the latter, there have been zero signs of progress lately, with the two negotiating teams even appearing reluctant to meet in person. Reports suggest they are still worlds apart on some of the biggest issues, which highlights that the road to any deal will likely be difficult. The greenback surrendered ground on Friday and remains on the back foot early on Monday. The move is likely an aftershock following Fed Chief Powell's dovish remarks last week. Markets continue to price an approximately 20% probability for a double rate cut of 50 basis points at the July 31st meeting. If these aggressive expectations are priced out, the greenback may rebound a little. Overall, though, the outlook for the dollar remains grim. The global central banks are entering an easing cycle, and the Fed has much more room to cut rates than anyone else. Hence, the potential downside in the dollar may be much greater than the euros or the yens, as both the ECB and Bank of Japan have much less scope to cut. On the data front, the next major release will be New Zealand CPI figures for quarter two, due early on Tuesday. Forecasts point to a rebound of the nation's inflation rate, but markets seem convinced that this won't be enough to keep the RBNZ from slashing rates in August. Any surprise in these prints will likely be crucial in setting expectations for that event and hence for the Kiwi's near-term direction. This was today's Daily Market Comment. Thank you for watching us at XM.com.